Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, we're not going to look at the gold chart or the silver chart or really any chart right here because, look, we can just continue on with what we've been saying the last couple weeks to even month now is that a lot of charts are simply moving sideways. We're waiting for more of a direction here. But we can relate back to a recent article that you posted that looked at more the precious metal stocks that you like or that you think have a better opportunity in this environment here, where precious metals prices are remaining, especially for gold, quite elevated over that $2,000 level. But the underlying stocks, man, oh man, yesterday morning, there are a bunch of juniors that were just going no bid for a couple hours, showing again that this market generally kind of slow. What stocks, what stage of companies are you looking for when you are diving down into the precious metal stocks in, again, this generally flat price environment?
Well, I would say it's very difficult because I'm actively looking and trying to find stocks that could be worth being on my top 10 list because periodically you always have to review what you own and then look at other stocks because when you do that, you'll probably realize there's something out there, maybe a couple of things that might be better than what you have on your list. And so that's always good to do that. But generally speaking, I'm looking at companies that are going to add significant value, and then that value will be leveraged by the bull market. So I prefer that rather than just pure optionality plays where they're just sitting on ounces and they don't have that much exploration potential, and so it's the gold breakout, which will be the driver. So I'm avoiding those at this point. So I'm really focused on small companies that have significant production growth potential. And so small, I don't mean something that's necessarily under a 100 million market cap, but looking for things that they're probably above that market cap, but not too big, probably below 1 billion. So kind of, you get to that 200, 300, 400 million, that kind of sweet spot where they have significant production growth potential over the next 2 or 3 years. That's a real sweet spot. And then from those, I want to see which are the companies that are going to be able to fund their growth without significant dilution or significant debt. I mean, I really like companies doing a phased approach. That's one way to look at it. I've said before on your show that the holy grail is when a producer is when they have significant exploration success or they make a significant discovery. I mean, everybody knows about Kirkland Lake. So to me, that's the holy grail. So looking for companies with production growth potential that are really keen on exploration and making a big discovery. So when it comes to producers, those are the types of companies that I'm looking for because if you get, if you can go from, let's say, 100,000 to 250,000 or from, 50,000 to 150,000 or from 150,000 to 300 or 400,000, companies with that kind of potential, they're really going to leverage the potential gains in a bull market. So you have that type, and then the other type is looking at exploration companies where they have some. I mean, for me, I like to look and see they have something already, so that's not a pre-discovery play, and so they have something with value already, but there's potential for that to grow significantly. Now, it's much, much more difficult to find those exploration companies that fit those parameters that I'm looking for. And you can kind of gauge or measure, the probabilities better with the producers than the exploration companies. So those are the two areas that I'm really looking at. And on the exploration side, it's a lot more difficult, but I'm still looking.
Well, some good thoughts there, Jordan. It sounds like the common theme being both sets of companies, the advanced explorers and the growth-oriented producers, can add significant value in a rising metals price environment. They're not just an optionality play that's going to rise all ships ride with the tide. It's more of they are planning to grow value based on their work plan. I want to dive into the growth-oriented producers a little further, though, because in my experience, Jordan, a lot of people shun the producers. They kind of pile into the expiration stocks. A lot of newsletter writers only cover expiration stocks. And a lot of people on the Lassonde curve make the erroneous statement that once a mine goes into production, it's fully valued. And nothing could be further from the truth. They could actually build more mines. They can actually develop other projects. They can take their mine and, like you say, make a discovery like Kirkland Lake or like West Dome or like K92 Mining and change the game on their production. So there's a lot of growth that these producers can have. But you talked about the phased approach where a company is growing organically. Maybe they've got one mine and they're going to use that to fund the second mine and then fund their exploration with it. And we hear people poo-poo that idea, Jordan, saying, oh, well, the problem with small producers is that they have small mines. They're going to have all the problems a big mine can have, but not the big mine to bail them out. But they ignore the fact that these companies can have 3, 4, 5, 7 mines going, and it's not just all about one giant mine. And a big mine can have problems with CapEx, and it could sit on the shelf forever and not get built, or the company can go into production and hang their hat on it. And then if there's a problem, they're in a major issue. So maybe talk about why you like these kind of mid-sized or smaller junior producers and why you like the phased approach, all things considered.
Well, when I got into this industry, or when I started investing in the sector nearly 20 years ago, I obviously didn't know a whole lot, but when you get lucky and you think a big move is going to happen and then it actually happens, you can do really well. And so I didn't know that much, but I thought growth is what I'm looking for. I don't know anything. I don't know that much about mining in general, but I want to find the small companies that are growing. And so, I mean, for me, I just started looking for small companies that had production growth potential. And then to leverage that, I looked for small silver companies that had production growth potential. I mean, I remember Silver, what's the name? Silver Corp. That's one that I got into in 2004, early 2005, that had huge production growth potential. First Majestic Silver, I mean, that had a huge move after the mid 2000s and during the 28 to 2011 cyclical bull market. And so there were a couple gold producers I remember, and I think Silver Wheaton was another one. So yeah, I get that's just something I mean, that worked for me at the time, and I think it worked for companies also in the 2018, the August 2018 to August 2020 period, although that was really volatile because you had the COVID crash in between. But it's just something I've always thought, just looking for the small companies with growth potential in any sector, in any bull market. If you can find the best ones in that niche, I think those are the companies that will always do the best. It's a lot more predictable, and I just think your hit rate with those companies, those types of companies, is going to be much higher than when you're looking at exploration companies and trying to find potential 10 baggers. I mean, you might for every snowline gold that's out there, for example, for the people who found that, I mean, kudos to them, but it's likely that in order to find snowline gold, they invested in 3, 4, 5, 6 other companies that didn't do as well. So your hit rate with small producers with production growth potential is going to be much better. And obviously, the exploration is a much sexier story. I mean, these pure small companies, especially if they've found something already, they've made some kind of discovery, and they're telling you this has real potential to be massive and world class or tier 1 or whatever. That's a much sexier story than, well, we're producing 75,000 ounces right now, and we have the assets in 3 years to get to 200,000 ounces. It's just I just think the average person, they tend to get more seduced by the exploration potential, when for me, I get more excited by finding growth-oriented producers that have this huge production growth potential over the next 2 or 3 years. And so if we're getting into a real bull market here, where you could see 4,000 or 5,000 gold in the next 2, 3, 4 years, and you factor in some cost inflation and you do the math for some of these producers, they're going to be generating significant cash flow that, I mean, for me, it's almost a no-brainer to concentrate more on those types of companies than exploration companies where you're trying to predict who's going to grow their discovery to 3 million ounces, or which little silver discovery is going to be 100 million ounces. It's just, I mean, it's more exciting because there's more of a, it's more of a gamble. So you kind of have that feel. But for me, I just think the odds of success, picking the small producers with growth potential, they're much, much higher, and you can still make huge gains. I mean, that's the point. The point is not to buy the producers just because you could double or triple your money. I mean, if you look hard enough, if you get in at the right prices and you get lucky and you get in before gold makes a vertical move for a couple years, you're going to make the same kind of gains with those companies than you would, trying to find the smaller exploration companies that are trying to make a huge discovery.
So, Jordan, to that point, you are right. And there is kind of a little bit of built-in safety with these growth-oriented producers. But when you're looking at the growth side of things, is it expanding the current mine? Is it bringing on another asset? Is it exploring around current production? What do you look for in terms of growth? Because in all fairness, every producer says that they're going to grow, but not all growth is equal.
It's everything you said, honestly. I mean, I like the phased approach when a company is, let's say they're already in production, but the mine that they have, they think that they could expand it significantly over the next 2 or 3 years. I mean, that to me is really exciting. I mean, that's just as exciting as making a big discovery. Yeah, there's that. And then there's also a company or a type of company, I should say, where they're going into production with their first mine, but they have a strong pipeline where you can see that they're not just a company who's putting a small mine into production and that's it. They don't really know what's next. They're a company that's putting a mine in production, and then they have this really strong pipeline, which tells you they could have the next mine going in 2 or 3 years. So the market will, I mean, that company will trade at a premium because the pipeline tells you that they have significant production growth potential. So it's really everything that you said, and yeah, the exploration side, that's really interesting. And who knows? I mean, you could own 5 or 6 producers, and you might get lucky with one of them who hits the holy grail, and they make a huge discovery that really transforms their potential. So, I mean, and that's the other thing with the producers that are actively exploring and really trying to make that big discovery. That exploration, I don't want to say it's all free, but they're paying for it out of cash flow. So you're not being diluted by producers who are doing exploration, whereas a typical smaller exploration company, there's dilution every year because they have to keep raising money. I mean, the hope is that they can add value, this year and the next year, and so they're raising at higher levels so you don't really get diluted. But I mean, it's really difficult because if an exploration company doesn't really add value for 1 year, I mean, there's huge dilution that you have to deal with, and then they're going to have to do a couple raises just to really hit that peak as far as growing that discovery or making a new discovery, just building that up where the market recognizes that it has real potential. I mean, there's a lot of raises that can take you where you are to get to that point. So those are other reasons why I tend to favor the growth-oriented producers more.
Okay, Jordan, thank you for your time. Thanks for your insights on the stocks. And I know it can be frustrating for a lot of investors looking at these stocks and not seeing them move, but look, that's just the environment we are in, and it does give you a good time to reshuffle your portfolio and focus on the kind of stocks that you think could take advantage of a rising gold environment or even provide you some protection on the downside. Jordan, thank you as always for your time. Have a great rest of your week.